You're back. Thank you for continuing this session with us. We love giving you this information because we're here to educate you and find you the solutions for whatever projects you're doing, whether it's buying, selling, investing, leasing properties. So that's what this channel was created for, to educate you on all the ins and outs, all the things you will encounter as you go through these processes. So this is Enna Morgan with Skyline Properties, my co-host Barry Stone with Evergreen Home Loans. This first video, we're talking about how to rapidly increase your credit score. That's the crux of getting you a loan, right? Your credit score. You've heard it from the time you were 2, your credit score. Very critical. So this video will look at what it is you can do to increase that credit score. And one of the other things that it's looking at here, which most of you think, I get a second job. That's going to bring my income up. I'll get a higher pre-qual amount. Not so fast, Skippy. Take a look. That's not necessarily the case. But don't take it from me. I'm just a mere real estate broker. Mr. Barry Stone, Evergreen Home Loans, will clarify whether that's true or not and why it isn't or is. Gotcha. Have a look. What does the hypothetical client do if they're encountering this difficulty that even if they bring that credit score up, because in their mind they're thinking, my credit score came up, why can't I qualify? Let's say a hypothetical client that qualified currently for $399 and they would like that number to move to maybe $425, $450.
Sure.
And they say, but my credit score went up, so why didn't the number move?
Okay. So that being said, if that is over or less than 700 to first factor, right?
Mhm.
So it's either 45.
That's
or
if the
50.
credit score is over
Right.
less than 700.
Now the other factor is what they could do to decrease their debt to income is they can pay down some of the debt,
Mhm.
right? If they have it,
Mhm.
down. Some
What
of the
if they
funds.
don't? They paid everything they can, but that number's just not moving.
Then, well, it's a hard no. All
Okay.
right. But what they could take out a second job or do overtime. Now,
Okay.
it may not be able to be calculated for their income because they have to have a history of that.
Mhm.
But they can use those funds,
Mhm.
that income, to pay down some of the debt.
Okay.
Meaning that they cannot use it for qualification purposes. I can't count that for extra income because they haven't done it for a period of time.
Mhm.
Okay?
Mhm.
But they can take those extra funds on their own, pay down the debt that they have, which will then change their debt to income ratio.
Okay, let's recap that. So, client, they're still under 700, and that pre-qual number isn't moving
Right.
because this is the income, this is the credit score,
Right.
and we've got a few debts out there
Right.
that are still lurking, and they would like that number to move up, that pre-qual number to move up.
Okay.
So what I hear you saying is the number they need to move is that income. And they can do so with a part-time job, but it cannot be used to be calculated within that ratio, but they can take that part-time job to bring down the debt, which would essentially raise the credit score to affect the DTI.
Yes.
Yes?
So what they could do is, like I said, it won't change their income.
Mm-hmm.
Okay. Effectively for the purpose of the loan.
Mm-hmm.
But they take the extra funds, they pay down the debt, when then their available credit obviously would increase,
Mm-hmm.
and then what we can do is rescore their credit,
Mm-hmm.
and conceivably, the credit score would then go up as
Mhm.
well as their debt's going down. So they would get kind of a double bonus there in the sense
Right.
that their debt to income will go down
Mm-hmm.
and their credit score goes up.
Mm-hmm.
That's the beauty
Right.
of that. So.
Right. So I think the crux of what's happening here is what we're doing by getting that second job is changing the number of their available credit. And with their available credit increasing, it essentially proportionately decreases their debt,
Correct.
which then brings that credit score, that needle up.
Correct. 'Cause
And,
that-
and even if it doesn't bring it up on, let's say, the general view, TransUnion or whatever, you at the back end as a lender, you're seeing that.
Correct.
Am I right?
Right.
And it's a more immediate thing, and we talked earlier about the
Correct.
individual file, so you can look at that and
Correct.
say, this has been paid, I feel safer lending you more money
Correct.
because you have less debt.
What we do is we order what we call a rapid rescore. We go, okay, they paid down this debt. Let's
Mhm.
verify that, and then we go ask an agency to go out, pull the data, show the new balance, which is lower on the debts, or they're eliminated, and then they rescore it. Because generally speaking, they don't like to rescore it within short periods of time.
Right.
And they usually only report once a month
Mhm.
on certain days. It depends on which days, but so you have to ask them to do it. They charge, of course, but
Mhm.
we pay it, and then they go get the new report and pull it in. So yes, that's a quick way to do it.
Mhm.
It's not real quick, but it's a quick way to do it. So.
You heard it. That's how you can change your credit score. All the things you can do, or all the things you are doing that affects that credit score, hence is preventing you from getting approved for the loan that you want. As always, we look for solutions here. So those are the tips that you can use to bring down that DTI, bring down the debt, so that you can get increase your credit score and get a higher loan approval amount. We'll see you in the next one.